Good afternoon. It's a pleasure to talk to you today, and our audience would like to know more about your fund, about yourself. So if you please take a couple of minutes and give us some general information about your fund and yourself, please.
Yeah, great to connect and great to meet you as well. So Foundation has been around for like more than 25 years. We've been investing since 95. And over the years, we've made investments across different categories. We are investors in consumer, fintech, enterprise software, and frontier tech. And we don't really worry about where the founders are based, as long as the US market is one of the target markets for them at some point of their life cycle. And we invest across stages, the sweet spot being seeds, A's and B's. And we typically like to lead those rounds. And different funds have different ranges for those rounds, but our preference is to invest between $1 to $4 to $5 million for the seed stage. We can go as low as like a couple of 100K as well, but those are few exceptions. A's are between 5 to 15 in terms of ticket size, and B's are beyond that. And B rounds could be of different ranges and sizes as well. In terms of our portfolio, you can see obviously a bunch of like known companies and logos on our website. But just to give you a flavor on the consumer and the fintech side, we are investors in companies like Netflix, Lending Club, Uber, Chegg, and for a lot of these companies, we were kind of the first check in the company. Like in Netflix, we were the first investors in '98 when it was a DVD company, and we've been on the board for like many years after that, and seen like all the different transformations that the company has gone through. On the enterprise side, there are companies like Mobile Iron, Cohesity, Fortanix, ForgeRock, Eightfold AI. So there are companies up and down the enterprise stack, from the infrastructure layer to the application layer. And then we also focus on the deep tech side, where we have companies like Cerebrus Systems, GraphCore, and a bunch of other companies as well. So you can see that we are across different verticals and categories, and are also across stages.
Yeah, Foundation is a very famous fund, and I've been always impressed with the range of the deals you guys invest into. But you kind of were always was staying with your own strategy. Like, sometimes there's a wave and everybody wants to go and invest in AI, and then there's a wave and everybody wants to go into e-commerce. If you look at your portfolio, you've been capable of identifying potential leaders early on. And is there an art or science to that system? Or do you guys use a formula, or is it based on the experience of your partners? How would you say, what is your investment process? What does it take for a company to get a yes from your fund?
Yep, that's a great question, and I could take the whole day talking about that, but I'll try to be concise about it. I think for us, uh, each of the partners in the fund, right, they come from strong operating backgrounds, and they understand like what it takes to build a meaningful business over a period of time. So we definitely have that lens on. But then beyond that, each of us like have our own sweet spots. We all have a perspective on like what would be the next trend, the next big category winner in those specific areas. And that doesn't just come from like staying in your office and doing some research. It's actively going out, talking to practitioners, talking to people in the industry. So we've kind of developed this huge network of practitioners, people who are users and buyers of different tech products across different areas that we invest in, and we continuously like to grow this network. and also like help connect some of our portfolio or most of our portfolio companies to this network. But beyond that, we also kind of leverage this network to understand what are their day-to-day pain points like, and having a strong point of view on like what those pain points are helps us understand that this is the next thing that they need in their day-to-day workflow, and we try and like figure out the right team along with the right approach that is going to kind of address that pain point in the short to long term. Obviously, many times you don't start off by completely addressing a pain point, but you start off in the right direction. And for us, a big emphasis is the team, and we love to see a combination of a strong technologist as well as someone with a product vision in the team as well, because only then you can kind of build something that aligns with a user's workflow and fit in their day to day, so that they
Mhm.
would benefit from it and gain value from it.
Yeah, I understand you usually take a board seat after you make an investment. Are you an active participant in the process, or how would you define your not your particular, but say typical fund board behavior? Do you control the CEO somehow, or you just help? I guess to make it easier for you, let's take Netflix. When you made that investment, they had a totally different idea of where
Yep.
they wanted to go,
Yep.
right? So the idea to pivot, did it come from you as a board member, or how does it work? How active are you when you take a board seat?
So I think activity levels goes back to the definition of activity, right? Like we would never be like want to be perceived as people who are running the company, because we are not. We are investing in people who are strong enough to kind of start the company, build the company, and grow the company. So they are the ones who will attract the right people from a product point of view, from a marketing point of view, from an engineering point of view, that will help the company grow in the right direction. Now, that might require certain changes in strategy along the way. Netflix transformed at least 4 to 5 times to where it is today. And it had to do that because it had to reinvent itself. It had to understand what the market needed, and it reinvented itself. And I think it could only do that because of the strong founding team of the company. I don't think uh, any fund could tell them like what to do, but a fund could always enable what a company wants to do. You could always be supportive of what the strategy might look like, and you could always enable that in many different ways. So the way we think about like working with our portfolio companies is not just taking like a passive board seat. Since everyone has been a strong operator before, we kind of bring our skill sets collectively to the table. Also, unlike many other funds, we are it's not like if one partner is invested in a company, then that's that particular partner's company and that's their problem. It's like the portfolio company of the collective fund itself. So every partner gets involved in helping that company from their own perspective, from their own experience. And the way we help the companies is in multiple different ways. One is definitely in terms of hiring the right people, because it's a combination of like hiring from our own networks, as well as also like talking to people who they'd like to hire and bring on board, to kind of convince them that this is also a unique opportunity. You always have the choice of going to a Google or a Facebook, but why would you go to like a small company? And I think we can always like help them understand like how we view the market, and how that might align or might be different perspective from the founders themselves. So that's one aspect of hiring itself. The second aspect is around helping them with introductions, whether that's introductions with customers, with buyers, with people that they can partner with advisors. And I think that has brought a lot of value to a lot of our portfolio companies. We continuously do events around like CIOs, CTOs, where we are bringing them around the table doing events around like understanding their pain points. And then we invite our portfolio companies and companies that we are closely tracking to come and hear those pain points so that they can learn what they should kind of address when they are building their product and selling their product. And then obviously we get involved in helping them raise their future rounds as well. That's bringing the right kind of syndicate to the table in terms of other investors, growth investors for the existing rounds, for future rounds. So we get involved in multiple different ways to enable whatever their strategy is, but the strategy comes from the founding team themselves.
You've mentioned a founding team more than once. And
Mhm.
now that we are in this, I wouldn't say new environment, because after
Yeah.
8 months, it looks like it's here to stay. How do you evaluate a team? I know that all other aspects of due diligence, yeah, you can do it. We always did it by calling someone, and you guys have this enormous network. There's always someone you can reach out to. But how do you evaluate a team if it's all online now? Have you?
Yeah.
I'm sure you're doing it, but how do you do that online?
Yeah, as the environment changed, obviously everyone values uh, meeting in person, and it's hard to take away whatever you can learn about the interactions within their team, as well as how they react to like what you say in person. It's hard to take away that interaction, but I think everyone is very in a very interesting way adapted to the online world, and it's yet to be seen like how that might change once COVID potentially goes away in like a couple of months or in a year or two. But the way we think about it is one, how do you get to know the person as well as possible? So I think it's building relationships. And so obviously when you're investing in an early stage company, you would want to know the person. So rather than getting involved at the time of the transaction, ideally, we would love to get to know the team over like a couple of weeks or a couple of months so that they get to see how we work, how we can contribute to them. They get to see, and we also get to track their progress as well in the meantime, and then potentially make an investment. But it doesn't have, it's not always a world like where you can like meet people and get to know them. It also happens that you like meet people around the time that they're raising capital, and you might really love the company, the product, and so on. And I think that at that point we depend on the intuition and the gut of the partner who's leading that deal, who's building that relationship with that founder, and feels like this is the right person to invest in. But it doesn't happen by just talking to the founders themselves. You need to talk to their team. You need to talk to like the people that they'd worked with in the past. So doing like a lot of references and a lot of calls around the person that you want to back, because what you want to know is uh, running a company, running an early stage company is not a short gig. It takes you 5 to 10 years to build a company, and how persistent is the person, how passionate is the person, and how much and how much can they think outside of the box to solve hard problems. And I think all of those things don't come from like mere interactions with that person. It comes from by talking to the ecosystem that they interact with. And I think that's why that level of diligence around people has really gone up in the remote world.
Yeah, and sometimes people ask me, how do you guys find deals? And I said, well, if you have a brand recognition, then the deals come to you, especially when you guys have been around for over 20 years. And when the investments you've made,
Yep.
then for anyone to get to foundation, it's like, yay, they would really put out the best game presenting to you. And now you've described how you really can do due diligence using the extensive network. And of course, a champion within the fund will take, I wouldn't say personal, well, yeah, at some point, a personal responsibility to sell this entrepreneur to his partnership, because he'll be the one spending time with it. So your deals are mostly in the US, but I would imagine that some of the founders came from outside of the US. right? Would you describe the diversity of your investments? I mean, they're all U.S. companies, but the founders, did they come from, I guess what I'm trying to say, Silicon Valley, obviously everybody says is the center,
Mhm.
but there are other centers of excellence, innovation excellence around the world. So
Yep,
would
yep.
you identify some others that you are reaching out to bring
So,
companies back?
so firstly, I wanted to make a correction. It's all our companies are not in the US. We
Oh,
have investments in Europe as well. We have investments in Canada as well, and we have investments in India as well. Because many years back, we thought of investing in India as a market. So we do have some investments in India too, and we are pretty active in Latin America. So
oh,
companies like Rappi, Platzi, which are like market leaders in Latin America, which are focused on Latin America markets and not on the US market, we are big investors in that geography as well, and that's because there are different partners who come from different backgrounds. So one of my partners who is from Latin America, he's led the charge on finding the right companies in that geography. The reason we've invested in multiple companies based out of Europe is because a lot of fintech innovation happens in Europe, and then we kind of adapt that and learn from that in the US market. And so there are a few fintech investments that we made in Europe itself. And I feel like even on the infrastructure side or the developer first companies, a lot of them are being built out of places like Poland, Berlin, and others, and even London. And I'm actively looking at companies based out of there because their focus is building for the global market. So just wanted to clarify that one point, that we are investing in companies around the globe. And we've made, just in terms of numbers, we've made more than 200 investments in the last couple of years, of which there have been 28 IPOs and 70 exits, just in terms of on numbers itself. To answer your specific question on like diversity itself, I think that diversity comes from the partnership itself, because the partnership, if you look at our partnership that sits around the table on every Monday morning for the partnership meeting, everyone comes from a different background. You have a Canadian, you have someone from China, you have someone from India, you have someone from Mexico. So there are people across the globe who are sitting around in the partnership. And I think that adds a lot of color and perspective. And it also adds a lot of um, uh, different groups that you know really well. So for example, I have been very well connected with the IIT network, given my IIT background back from India. And the IIT network is huge in terms of starting companies, scaling companies. A lot of successful portfolio companies and foundations portfolio have been started by IITians. So that's really helped us kind of find the right set of people as well. So we all like tap into our own networks in a very compelling way, whether it's a network from a school, whether it's a network from a region, someone who's come from Canada and spent time in Chicago. She's like she knows everyone in that geography, and gets all the deals from that geography beyond getting deals from other places as well. So it's knowing or being very entrenched in networks that come from different walks of your life, and that's only possible because our team is so diverse.
Yeah. Yeah, it's very impressive. So what do you say, how much capital do you have under management if you go through all of your funds? What, several billion for sure?
It's several billion for sure, and we also want to ensure that when as partners we have enough bandwidth for every company that we are investing in, because we are not passive board members, and that's why we typically prefer even the seed investments to be in the zip code of like $1 to $5 million in ticket size, so that we are taking enough ownership and also like spending enough time with the company. It happens many times when you love a product and you love a team, but you can't potentially invest as much. So we are flexible as well, but we definitely care a lot about our bandwidth with the companies that we've invested in.
Yeah. Well, going forward, we will spend more time online and many businesses will move online. And I know that digital health has been around forever,
Right.
but now that telemedicine is really picking up, I've noticed you're on the board of a company, a mental health company. Would you comment, is that, I thought so, I thought it was
It's a,
listed, correct?
no, so
Yeah.
are you referring to Memora Health, which is
Uh-huh.
it's it's not a mental health company. It's a company that's enabling like health systems to improve management of their populations through a text-based platform with more digitized care pathways and care protocols at the back end.
Oh,
That's
okay.
what the
So
company
it's an
does.
enabling company, right? Well, I guess there will be more and more tools like that available. But if you take out your crystal ball and you'll say, well, because you guys picked like coming back to Netflix or Uber early on before anyone knew it will be a trend. Can you see any budding trends, or is it a secret and I'll keep it to yourself?
No, absolutely. I can give you examples because we can't possibly cover all trends on this call. I think it's a combination of why now and what's changing in user behavior. So an example of why now is if you looked at the pandemic, right? We saw that there was a rapid increase in momentum around digital transformation within enterprises, where like CIOs have been talking about and also adopting cloud in a more meaningful way, which was not going to happen otherwise in many years. But now that entire transformation cycle has shrunk just because of why now, because of the pandemic. And so based on that trend, for instance, we made an investment in a company which is an open source company that helps you that helps provide a library of policies to help you manage cloud adoption in a more effective way for enterprises. And enterprises are adopting that in a very rapid way. It's a company called Stacklet, which is managing this open source tool called Cloud Custodian. So that's one example of like why now and that trend itself of why now. Another example is around user behavior itself. So if you look at developers, a lot of them are actually looking towards agile methodologies of software development, which we call DevOps today. And the entire process of continuous integration and continuous delivery of software has really been expedited. But at the same time, they're also looking towards open source solutions to kind of solve a lot of their problems, because those solutions are easy to try, easily accessible, and so on. So we kind of identified that trend on the continuous delivery side, where we saw that a lot of developers were actively using something called Spinnaker. Spinnaker is something that came out of Netflix. Because Netflix is again on a pretty agile way of software development, and it's a massive organization. So they open source this tool called Spinnaker, and a lot of enterprises, a lot of developers are adopting Spinnaker. So we backed this company called OpsMX, which is helping increase the adoption of Spinnaker as one part of it, and then also helping companies manage and deploy Spinnaker more effectively. So it becomes like an enterprise solution for management of an open source company. And that's all because we saw that user trend around like expediting your cycles, as well as looking towards open source Spinnaker. There are two examples of like how we've looked at the market and how we've made an investment. And similarly, I think we are like I'm actively exploring opportunities, as you mentioned, not just in health tech, but also in every aspect of um, tools and technologies that sell to the technical audience. So whether it's in data engineering, whether it's in dev or DevOps, within the dev side, every company is trying to understand productivity of the engineering workforce, because you can easily calculate productivity for for your revenue side of the organization, because they're closing deals. You're obviously looking at every quarter. You're tracking their productivity. But how do you look at productivity of engineering? And it's not about like reporting productivity. It's about helping developers themselves in being more productive, in taking away the repetitive tasks away from them, so that they can focus on things that matter more to them. So I'm
Right.
actively looking at that area, and I'm looking to make an investment in that space as well.
Fascinating. Yeah, it sounds very straightforward. I'm sure that's what everybody else will do. Well, that's, you watched what's happening outside and you just try to kind of that predict what is there to stay. And I think that all the enabling technologies are becoming more and more important, because we are having this paradigm shift. And for us to carry on into I wouldn't say in the next year, what's in the next decade,
Right.
we need to build that foundation now. Okay, my last question. How do people find you? Well, I mean, I know how to find you. It's a very famous fund. But I mean, what is the best way to do it? Some funds say, oh, talk to our lawyers or accountants with some introduction. Like, what's the case with you? How
Uh,
do people find you?
I think
I
if
mean,
you,
entrepreneurs, if they want to
yeah,
pitch their.
totally. I think directly you can email me. My email is apandhi, apandhi, at foundationcap.com. Or you can reach out to me by LinkedIn, or you can reach out to me or DM me on Twitter. Either of these sources work well for me. And we'll ensure that we'll definitely look at whatever you send us, even if we don't get to talk to everyone, because it's hard to talk to everyone. But we'll definitely look at everything, and looking forward to talking to whoever reaches out cold as well, because I think there's one myth that you only talk to people that you're introduced to. We don't believe that. We feel that we've always been responsive to people who've also reached out to us. So doors are always open.
Well, thank you so much. It was very informative. And I mean, I've known your fund for many years, but I think our audience has a very good idea now how to find you and what deals they should bring to you. Thank you again.
Awesome. Nice to meet you as well.
Nice to meet you. Natalie, we're done.